Thanks so much for tuning in to this conversation with the management of Zen Technologies. They'd come out with a very good set of numbers, of course, relative to the expectations that they've set in the last 2 or 3 quarters. The margins came off a little bit, and that's why the 78% PAT growth looks a bit feeble relative to the revenue growth number of 99%. The MD of the company, Mr. Ashok Atluri, joins in right now to talk about the numbers and the outlook ahead. Mr. Atluri, great having you. Thanks for taking the time out. Hope all is well.
Yeah. Thank you. Thank you for inviting me.
Put the quarter or the first half into perspective. You could argue that, I know it's not the best way to look at your business, which is sequentially, but relative to what you did in quarter one, the sharp drop in quarter two, are there some reasons for such a thing to happen? Is the business very seasonal in nature?
It's not seasonal, but the orders that we started executing in the second quarter were pertaining to the orders that we received just before March. So typical execution period starts from 6 to 18 months. So that's why this is a little low, but we expect, and typically our fourth quarter has been very heavy conventionally. So I think that will continue even in this.
Okay. I will come to the outlook in just a moment. Just want to understand, one, what is the nature of the order wins that are happening currently? And is there a possibility, I heard you say that quarter four is very heavy seasonally. So is it possible that even in terms of order flow, a large percentage of orders might actually come in quarter four, not right now?
So we are expecting orders worth around 500 crores to, at least 500 crores worth of orders to add up into our, the order book by the end of the year. So that we expect. And our order book currently, about 800 crores is training simulators, including AMC. And anti-drone systems is about 600 crores, including AMC. So that's the split between both of them.
Okay. What percentage of this order flow is AMC and what percentage is just pure execution?
So out of the 1,400 crores, about 200 plus crores are just AMC. And around 1,200 crores are equipment orders. Yeah.
And based on what you've bid and what you expect, which is about 500 crores, would these be pure execution or is this a combination of AMC plus execution?
No, this would be a combination of AMC and equipment, yes.
But roughly 80-20 ratio, if you will?
Yeah, could be, yes.
Okay.
Yeah.
Okay. One other quick question is on the margins for the current quarter. Relative to Q2 FY23, they were about 150 bips lower. Is this more a factor of raw material costs or is there something else?
No, it's just, I think probably raw material played a part. But again, we think as we go, what we have said is setting the expectation of 35% EBITDA for the whole year on an average, because if you look at the Q1 of the current, it was very high. But again, now it is, I think by the fourth quarter, we are saying that at least 35% EBITDA will be there.
Okay. So you expect on an average, you will do 35% EBITDA margins for FY24 as a year?
That's right. Yeah.
And is that the run rate that you hope to maintain as the company grows larger?
So we continue. I think even 25, 26 with 35% is expected to be maintained.
Okay. I'm just wondering, is that the normal course of margins that companies in your business would be making, or are you doing something better or more efficient for you to clock in those numbers?
Our company, the way we have looked at our company is that all the IP that we have in the company is owned by us. When you look at Zen, you have to look at it in a very different way compared to other companies that have either collaborated with the DRDO or a foreign company and jointly hold the IP at best. At worst, they are just manufacturing as per the blueprint given by the foreign company. In our case, ground up, we have over 140 global patents that we have applied for, and and complete IP ownership is with us. So when and I give an example of our iPhone. When you look at iPhone, $1,000 iPhone, the material cost is below material is $245. And $5 are made by Foxconn to manufacture it. The remaining $750, which is the IP ownership play, which Apple does, belongs to them because IP ownership is there. So because our margins are reasonably little higher than what the other people have, because they typically are not the owners of the IP of the product.
This is very interesting. Again, before I come to numbers, can you explain this to me, Mr. Atluri? What is the nature of these IPs that you hold? I heard you use the term on 140 patents. And what kind of moat does this IP give you as a business? Because when I look at the previous decade, Mr. Atluri, you yourself will admit that the numbers were very patchy, very low. It didn't come about. It can't suddenly happen that the street realized that the IP has so much value that you're getting orders at such high margins. So what's the moat that this IP gives you, if you can explain that? And does this ensure longevity of growth for you as a company? Can you give us some idea about that?
So, typically the IP that we have owned is, suppose, for example, there is a weapon and recoil system. The weapon recoil system is done. The whole weapon is replicated by us. The replicated simulated weapon has been patented by us. So there are some kind of motion platform that we have developed. We have patented globally, even US patent we have for that. So, so different kind of technologies that we develop, we have been patenting them regularly, basically asserting your right. But there are a lot of parts that we don't patent because they're so sensitive and so advanced that, part of patent is anybody can copy it. So with the easily copyable parts only are patented by us, but the difficult are not patented by us. So, because of these patents, a lot of people find it very difficult to replicate the weapons and all that. One of the advantage of that is that, when somebody wants to bid with us, they have to work around these patents and try to develop something, which we don't see a lot of people doing it. And again, the advantage is that, as you can see, most of the tenders that we participated in, we were a resultant single vendor situation, because there was nobody else who was able to develop this product, based on the specifications and the patents that we have.
Did all of this happen in the last 3, 4, 5 years, Mr. Atluri? Because you can see a sea change in what Zen is doing now versus what it did in the previous decade.
So, the one thing is, we think it's the environment to change more than what Zen has changed. Nothing Zen has done more. But the government's focus on, primarily on first is the Atmanirbharta. Indian Mr. Manohar Parrikar was the first person to introduce the Made in India, that IDDM category, which says if the IP is owned by an Indian company, we will even go for single vendor. So that was a path-breaking thing that he did. And, now that's all of that is actually playing out now to the advantage of companies that do R&D and just don't do manufacturing for other partners.
Got it. May I ask you, sir, if are you therefore also, I heard you say that you have a US patent too. I'm guessing that's not just one, but it must be at multiple geographies. Are you in a bid to bag international orders as well, or do the current capacities only allow you to fulfill the domestic orders, because even those must be very large?
So, when we look at the export, we have a ratio of export orders in there. So we have, out of the 1,400, almost 400 crores are export orders in that, about 350 to 400 crores.
Okay.
And the remaining 1,000 crores are domestic. So export is a big focus for us. And, Government of India is also having a target of $5 billion for export. And, because of that target, we're getting tremendous amount of support from various embassies worldwide. And even these orders that we got are definitely a result of Government of India's support to us. So, and there are a lot of things happening at this point in export. Unfortunate thing like Armenia, Azerbaijan, which was a drone war won by Azerbaijan against Armenia, has created a lot of demand for anti-drone systems worldwide. And Ukraine and Middle East conflicts now are actually creating huge demand for training. Both the places, Ukraine has, somebody said, they can win a third world war with the kind of donations they have received from Leopard tanks onward, everything. But they're losing like nobody's business because they're not trained on that. And similarly, you can see the world's most secure company was penetrated and there was no response. Then again, one of the things, there are many causes, but one of them definitely lack of preparedness. So this has really caught on worldwide, and they're saying that you have to be really prepared. And this eventuality, even if a ragtag of 300 people can, really surprise the country of that security. So there's a lot of, uncertainty and the worry world over. And I think they are thinking training is one way they can make themselves unbeatable in this.
Sorry, may I ask, if I have 5 more minutes with you, Mr. Atluri, may I ask, by training, what do you mean? Is Zentech also doing a training module, and is that a big business?
So we make simulators that we supply to the armed forces.
Yeah, of course. Yeah.
So the training is important. So they'll be buying. So
excuse me for that. Okay, just one more question on the order flows. The 500 crores that you're going to get, is some part of that also export oriented in nature?
this is pipeline, and I'm not saying we are going to get
Hopeful
there.
to get.
So we stand a reasonable good chance. And this is mostly domestic. It's a 100% domestic orders. Yeah.
Okay. Now, for some numbers, Mr. Atluri, I would love to understand from you. You mentioned that you expect to achieve a revenue target of 450 crores in FY24, and you've done about 200 crores, 198 crores to be precise thus far. So, does the execution pick up in quarter 3, or does it get back-ended towards quarter 4?
It will be heavy on the quarter 4. There is no doubt about that. Yeah.
Okay. The other aspect is your presentation says that out of the total order book of 1487 crores, equipment orders worth 1200 crores are slated for execution by 31st March 2025. If I just do a back of the envelope calculation, that suggests that in FY25, you will do revenues of at least 750 crores. So, do you envisage that from a run rate of 450 crores in FY24, you will jump to a run rate of 750 crores or more in FY25?
Yeah, I think we'll definitely cross 750. Just very quick math, arithmetic, the 1200 crores, out of that, we will execute at least 250 crores to hit our 450 crore target. And still, we will be having 950 crores left. So, we expect the whole order book to be, at least 900 plus crores to be executed during the FY25.
Got it. Oh, so you reach at least 950 crores by FY25.
Yes, that's right. Yeah.
Okay.
Yeah,
I have one final question. Maybe it's too premature to talk about very long-term plans, but because defense and security has become so important, you sitting at the helm of Zen right now, how do you look at Zen 5 years out? Do you expect the numbers to be substantially higher? Would you focus a lot more on ratios and winnings and margins as opposed to just top line growth? Can you tell us? Because, the history of Zen doesn't tell us too much about Zen. I would love to understand from the point of time right now to where you could be 5 years out. Do you have a vision set out?
So the history of India is unfortunately tied very close to the politics of India. But I think the situation has changed now in the sense that the irreversible changes have been made, and no matter which government comes, the make Atmanirbhar Bharta and Make in India will continue. So we do expect, and as the things we look at, the Chief of Army Staff also made a remark that the induction of simulators has just started. The orders that we are getting have just started. So in that Bharat Shakti conference. So given that situation, we think that the growth will be substantial, and about 3 to 4. I think that in 5 years from now, if we do a turnover of about 5,000 crores, I would still think that we have not achieved our targeted growth. It should be much more than that. But we are very ambitious as of now. You can see 100% growth now, but again, for the FY26, I at least see growth of at least 500 crores from the next year to FY25 to 26. Growth will be there. So yes, the environment is very, very powerful, very, very convivial for the growth of Zen's product sales.
And you expect that, sorry, one last question. You expect that you have capacities in place to do it. If you have to expand capacities, would you be able to do it with internal accruals, or do you envisage a fundraising exercise at some point of time to expand capacities?
So for expanding for the capex for plant and machinery, etc., there is no equipment, no expenditure required, because we have a very, very strong and robust supply chain. The R&D, engineering, everything, and after sales, post sales, everything is done by in-house. But the manufacturing, we have capacity in Hyderabad, very good guys, and better than us probably. So we push it out to them, and then they do it, and so that's right. Yeah.
Okay, so you don't envisage that even if the order book were to swell 3x from here, you are outsourcing that to external vendors so that you don't have to incur the capex yourself. Am I getting it correct?
Yeah. So if we, up to 2,000 crores, we estimate that we can handle with the existing supply chain. But after that, we will have to look at the supply chain again. As a company, we have taken a decision that we will not get into manufacturing, but we will have extensive vendor monitoring system in place so that the quality is not compromised. So yeah, we will not be doing much capex even if it goes to 2,000 crores. Yeah.
Got it. Mr. Atluri, it's the first time we are talking, but it was lovely talking to you. Thank you for taking the time out, and I look forward to continuing our conversations post Q3, Q4, or thereabouts. All the best, and to you and Team Zen, wishing you a very happy Diwali.
Happy Diwali to you. Thank you so much.
Yeah, thank you so much, and viewers, thanks for tuning in.